Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday, the markets right across the board ended up relatively weak against the US dollar. The US dollar, which measures the greenback strength against a basket of 6 major currencies, surged higher and ended up reclaiming the high of 108 figure. This week, global markets will be closely watching the annual gathering at this year's Jackson Hole Symposium in the state of Wyoming, with Friday morning speech, that is, from the US Federal Reserve, as it will be closely watched to see what Jerome Powell has to comment on and maybe give some clues on whether investors will see the US Central Bank signal to a 75 base point or whether they will ease slightly, that is, to the pace, and increase the benchmark by only 50 basis points. This year's topic is on reassessing constraints on the economic and policy. This year's symposium marks the first in-person Jackson Hole conference since 2019. As we assess the markets, the Australian dollar took a heavy tumble and now holds just above the support level of 68.60, seen as a key level. In light of the pattern, we are oversold. However, the ADX is still trending and the MACD is married up to the negative bias. Keep an eye on this support level of 68.60, as a break would give further indication to the downside, and look towards the region of 67.90 as a potential target. But as I mentioned, the market is oversold, so we could see a little bit of profit taking since the rejection around that 71 region. Looking at the euro, well, since the market crushed the level of 101.1535, further weakness has come into play and now looks towards the region of 99.5080. It is assessed from there the market may actually stage a rebound. Due to the ADX holding to a bearish bias or trend, the market is likely to be weaker to the start of this week and look towards this region anywhere from 30 to 80 points. And let's see, like previously we saw back here in early July, of a rebound. The dollar yen continues its march upwards and now very much close to its objective, which was called at 137.3050 after seeing an intraday high this morning of 137.07. It is viewed that we could see a rejection from this cap, like previously seen back here in late July, and if so, would see a pullback to a potential target of around 134.8090. Sterling continues its weaker down play and now looks contesting at the level of 118 figure 25. A break here would give further indication to the weaker play, that is, to the trend, and maybe looking down towards 117.50-70 area and reassess. We are oversold. However, with the MACD and also the ADX trending to a bear case, could see a little bit more pressure. And along with that, as I mentioned at the beginning of this webinar, the US dollar is still relatively firm as it recaptures that 108 area. The gold outlook, well, the market has crushed the level of 1,755 and now exposes further risk to the downside to 1,732 and reassess from that region. Somewhere around 32 to 36, as previously seen, we did see a bull candle here, but failing to hold there, then the weakness may actually tumble further, and that is towards the region of 1,700 to 22 to 24, which is somewhere around this area here. In light of the technicals, we're not trending, but the MACD has married to the RSI and supports the bear case. Finishing up with oil, well, the support level withstood the bearish pressure at $86 and now currently holds around 89. In light of the pattern, I still feel there is further upside potential and looking towards 90, 40, 60 and further towards 92, 70, 90 and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.